Welcome to the ultimate guide on our brand new Smart Money Toolkit. This toolkit is designed for price action traders looking to trade like institutions by spotting key market structures, liquidity zones, and order blocks without the noise of traditional indicators. In this video, we'll break down every feature, show you how to use them, and explain how they can improve your entries, reversals, and take profits. Let's kick things off with order blocks. These zones show where large buying or selling took place, often indicating institutional activity. You can choose between manual and dynamic order blocks. I prefer dynamic as it only creates blocks at the stronger high or low points. Now, a key feature here is the volumetric data. This shows the buying and selling pressure that formed around the order block, and it's a game changer for making better decisions. For example, right here we see a bullish order block formed, but the volume data reveals a lot of selling pressure in this area. The price quickly mitigated the order block, signaling that this wasn't the best entry. But later, another bullish order block formed with high buying pressure and low selling volume. That's the confidence you need to enter a trade. Set your entry at the order block and then target recent highs for a solid take profit. You can also filter order blocks with break of structure or change of character. This makes sure the order blocks shown have strong confirmations, giving you even more accuracy in your trading. By default, all order blocks are gray, but you can quickly turn it off, and bullish order blocks will be blue and bearish order blocks red, but you can change it to any color you like. Next up is change of character and break of structure. These help you identify trend changes and continuations in real time. Internal market structure gives you insights on smaller moves, while swing focuses on larger market shifts. But our toolkit also shows you a change of character plus, so let's see what's the difference between them. A bullish break of structure is created when a market creates a higher low and then a higher high. A bullish change of character is created when low, followed by a lower high, then a lower low, creating a bearish break of structure, and finally a higher high that breaks the previous lower high. And a bullish change of character plus is formed when a low occurs, followed by a lower high, then a failed lower low, and finally a higher high that breaks the previous lower high. Let's talk about fair value gaps. These represent price imbalances between buyers and sellers and can be great entry or exit points. For example, if the price revisits an FVG zone and starts to reject it, that's your signal to enter. You can also set your take profit at the next resistance level or order block, depending on your strategy. You can customize the settings to show more of recent FVGs or extend so you can see them easier. Liquidity is a critical concept in price action trading, and liquidity sweeps can help you avoid traps set by bigger players. For example, picture this. Price approaches a key resistance level, sweeps liquidity above it, and then sharply reverses. The toolkit marks these sweeps, helping you anticipate false breakouts and allowing you to enter at the right time, just when liquidity has been grabbed. Now on to high-low equilibrium zones, which mark strong and weak highs and lows, and shows you discount, equilibrium, and premium areas. For example, when you see a weak high, there is a high probability that the price will break through this level, but when you see a strong high, the price will have a hard time break this level and most likely will bounce off it. Discount and premium levels give you a massive edge, whether it is a good time to enter a trade. When the price is at the discount area, the price of the asset is cheaper than it should be, so it could be a good time to enter a long trade. Next is accumulation and distribution. These phases show whether the market is gathering orders for a breakout or distributing them ahead of a move. For example, if the toolkit identifies an accumulation zone, this can be your cue to enter before a breakout, catching the trend early. Conversely, in distribution, it's a warning that the price might drop, signaling you to either exit or consider shorting. Let's touch on equal highs and lows. These often act as liquidity targets. If price creates equal highs, it's likely building up liquidity above them. For example, if you spot equal lows, it's a prime spot to set your stop loss below them or wait for a liquidity sweep to catch a reversal entry. One of the most convenient features is the multi-time frame dashboard. This gives you a snapshot of the market structure across multiple time frames: 15 minutes, 1 hour, 4 hours, and daily. For example, let's say you're trading a 15-minute chart but want to confirm the overall trend. The dashboard can tell you if the 1 hour and 4 hour timeframes are aligned with your trade, giving you extra confidence to hold on to your position or exit early. Finally, we have bar coloring, which offers instant visual feedback. It colors your candles based on market structure, making it easier to spot trends or consolidations. For example, if you see a trend forming and the bars are consistently colored bullish, that's a quick, reliable confirmation to stay in your trade until the trend weakens. And that's the Smart Money Toolkit. By combining these powerful tools like order blocks, liquidity sweeps, and fair value gaps, you're getting an edge to trade like the big players. If you want to improve your entries, manage your take profits better, and avoid fakeouts, this toolkit is a must-have. If you found this guide helpful, make sure to hit that like button and subscribe for more strategies and trading tips. Thanks for watching, and I'll see you in the next one.